my topic is basically the economic impact of COVID-19 on the Finnish economy, how the outlook now looks, and what we should think about things evolving going forward. And I think the natural starting point is to note that this economic crisis that has been triggered by COVID-19 is huge in scale, in the sense that the previous global economic crisis, the global financial crisis, which started in the autumn of 2008, actually led to a standstill of global economic activity in 2009. This year, there are different forecasts, but for example, the IMF has forecast that the global output will decline by something like 5%, that order of magnitude. So it's much steeper globally than what we had in 2009. And the same goes for Europe. The latest ECB forecast suggests that on average this year GDP in Europe will be perhaps 7, 8, 10% less than it was last year, and the trough is something like 15%, the second quarter GDP lower than the previous year's second quarter. Now this is indeed a very deep recession, global recession, extending to all parts of the world. Now the other side of the coin then is that most forecasts see a rapid recovery, which already has started in the third quarter and now is forecast to continue through the fourth quarter and next year. However, the projections are very uncertain in many ways, and not least because of the uncertainty related to the COVID-19 itself. How serious the second wave will be. Will there be a third wave before we get vaccine and efficient medication? Nobody really knows. Now, when we look a bit more carefully what the economic impacts have been, so we can observe that they have been very different across countries. Here on the left-hand side, in the left-hand panel, I have depicted a number of EU countries. The horizontal axis describes how much the second quarter GDP declined compared to the second quarter in 2019. And as you can see, in Spain, it was over 20% decline. In Italy, France, Portugal, close to 20%, 15 and 20%. Finland was one of those countries which suffered least. The current number is minus 6.4%. On the vertical axis, I have then the EU Commission forecast for the year as a whole, and there too we see huge differences. The same countries which have suffered in the second quarter most also quite understandably will fare worse for the year as a whole. Finland again is one of the better countries in this regard. Now, what explains the huge differences? One obvious thing is, and it's clearly shown by statistics, that those countries which have been able to get control over the virus itself, or where the impact of the virus on health has been least, those countries have been able to survive best, also with regard to economic growth. You see on the right-hand side panel, you see Finland in the lower right corner. That's one part of the story. The second obvious thing is that the economic structure is, of course, very important in this regard. Those countries where activities which require close social contact, like services, personal services, traveling, have suffered most. That's quite obvious when we think of Italy, Spain in particular, Portugal, Greece to some extent. So there have been factors which have been perhaps partly in the hands of the authorities, and partly factors which have been beyond what the governments can do in the short run. Now, thinking of Finland, in the spring when the whole thing started, of course there were many forecasts made by different institutes, Ministry of Finance, Bank of Finland, and the range of the GDP drop for this year was very significant. The lower bound was somewhere around -5%, and the upper bound for the decline 13%. Now, the working group I was leading, the sort of economist working group that was set by the government to sort of examine the immediate implications and what sort of policy conclusions should be drawn, we took as a starting point a -9% decline this year. Now we are again wiser, more data has become available. We know what happened in the second quarter, at least roughly. And on the base of that and the recovery, of which we have indications for the third quarter, all those things suggest that actually it is the lower bound decline that is likely to be seen sort of materialize in the end for this year. So, for example, the Ministry of Finance, Bank of Finland, ETLA have projected that this year GDP will decline a little bit less than 5%. And then that will be followed by a recovery, which already, as I said, has started, and then will amount to something like 2.5 to 3.5% growth on average next year. The reason why the outcome seems to be better than widely thought in the spring is primarily that the pandemic has been controlled better than we thought in the spring. Actually, the second wave is only now starting, and in the meantime, actually, the incidence of the disease was much lower than we thought. That had an impact on the restrictions set by the authorities, but more importantly on the fear people were having with regard to social. This was a very important thing, obviously. Then the safety nets the society has provided for people they have functioned quite well, and they have been complemented by some extraordinary measures with regard to unemployment compensation, for example. Monetary and fiscal policies have turned out to be extremely supportive of growth as well, and even though they haven't really sort of changed the picture completely, nevertheless they have provided sort of promise that companies and people can get credit from banks. The credit is cheap. There have been also many support operations for the firms, both in Finland and in other countries. So in this sense, I think many of us were a little bit too pessimistic about the short run. Now, these short run developments, they tend to change quite rapidly, and now, as we know, we are in the midst of the second wave in Finland, and that again casts a sort of new shadow on the recovery that's underway. Anyway, I think the sort of consensus view is that the worst is over with regard to growth in Finland, but how fast we will recover and how sort of permanently or sustainably we will recover, nobody really knows at this point. Just a brief look at the immediate impacts of the crisis. The labor market was affected a great deal. We had layoffs or furloughs which were of completely different order of magnitude than, for example, in the early 1990s when we had the biggest economic crisis of our history after the Second World War, and much higher than in the aftermath of the global financial crisis. But the number of layoff people has also come down quite substantially through the summer, so that actually when we look at the forecast for employment rate and unemployment rate, we see worsening of the situation this year and also next year to some extent, but it's not dramatic. It is sort of a tiny bit, and the sort of thing is that compared to the last year, it is not that bad, but compared to where we should be, it's much worse because we have some structural issues which require that our employment rate should be much higher than what we have achieved so far. As we all remember, the government program states that we should have 75% employment rate by 2023, which is clearly unattainable at this point. The second thing where we see the huge impact of the crisis is public finances. This year, the deficit of the general government, that is the central government, state, the municipalities and the social security funds is close to 8% of GDP. And that is a difference of roughly 7 percentage points relative to last year. So it's even bigger than the difference in what we saw in 2009 compared to 2008, which was about 6 percentage points. More importantly, this deficit doesn't seem to go away, even though the forecast, and this is now the Ministry of Finance forecast that I'm showing you, even if the forecast has the starting point of GDP recovering modestly at least. Nevertheless, the deficits tend to remain there, even though they decline a little bit. And that obviously has an impact on public debt, which continues to increase again. It almost stabilized by 2019 through the last government's period, but now it's on the rise again, and the ratio of public debt to GDP is forecast to increase from about 60% to 75% 2024. So we are well beyond the stability and growth requirement of 60%, as most or basically almost every European country is, with the exception of Sweden and Estonia and maybe some other country. So this whole picture, the short-term outlook and the short-term developments and the very short-term outlook raises obviously the question: how serious is the impact of this crisis going to be? Are we going to see a third major crisis in the Finnish economy in 30 years? Most of us, or many of us, are old enough to remember what happened in the early 1990s when we had the biggest peacetime economic crisis in the OECD countries by that time. We recovered from that quite well. Painful in many ways with regard to unemployment, for example, but nevertheless the economy as a whole recovered quite well, only to be hit by a new shock then in the beginning of about more than 10 years ago with the global financial crisis. What we had then was a 10-year period, sort of lost decade, where actually the cumulative loss of GDP relative to the prior to the crisis peak was even bigger than what we had in the 1990s. And now the question obviously is, which way are we going to head? Very slow and tentative, temporary, or is it going to be sustainable? And to sort of try to understand this question where we are heading, I think it is somewhat useful or instructive to take a look at the two crises we have gone through over the past 30 years, because they perhaps give a sort of benchmark or starting point to think about what is likely to happen this time around. And they were rather different crises. In the 1990s, we had a combination of external shocks, the collapse of the Soviet Union and its impact on the export market. And we had a classic boom-bust cycle, domestic cycle, like we have seen in Spain, Ireland, Greece more recently. We had a huge financial crisis, banking crisis, monetary and fiscal policies or macro policies as a whole. They were tight in the beginning, first to defend the external value of the currency, and then also fiscal position was tight because the borrowing constraints of central government. The result was collapse of domestic demand, mass unemployment, and also widening income disparities. The recovery was quite classical in the sense that it was export-led. GDP grew rapidly, employment more slowly, and behind this development of rapid recovery in terms of GDP growth was a significant depreciation of the currency. The external value of our currency declined by about 30% in 1.5 years' time, from mid-1991 to end of 1992. That was sort of giving a boost for all kinds of production in Finland. The second thing was obviously the Nokia miracle. I think that be described like that because the growth of that company exceeded all the expectations of the company itself. A major restructuring in the economy took place in the sense that a lot of production that had been directed to the Soviet or Russian market just disappeared, as well as a lot of construction work, and some services also were slashed quite, or the resource use in some services was slashed quite a bit. For example, in banking, the employment was halved in a few years' time, from about 50,000 people to 25,000 people. Now, the Great Recession that followed the global financial crisis was very different. The shock was sort of completely outside Finland. We had no domestic financial crisis. The banking system was solid, has been solid throughout the period since 2008. Monetary and fiscal policies have been expansionary. They have supported growth. Nevertheless, when we look at what happened to the GDP, as I showed in the picture just a few minutes ago, the trajectory is pretty much the same as in Euro crisis countries rather than Northern European countries. That's a puzzle, but it can be explained by two factors. The collapse of Nokia's cell phone business, sort of the reversal of the great success 15 years earlier. Now it turned the other way around. It accounts perhaps half of the decline of GDP of some 8% by 2015 from the prior to crisis peak. And then weak cost competitiveness, which prevented growth of other types of production exports in Finland. Export and investment growth was indeed very weak throughout this period, while consumption was not. There is a clear difference in that regard when we compare it to what happened in the early 1990s. It was exports which led growth and recovery. Then now it was very weak for a very long time. However, this time around we didn't lose that much employment. We lost about 100,000 jobs at the worst point compared to the peak. Whereas in the 1990s, we lost almost 450,000 jobs, which is one job in five. 20% of jobs disappeared in a few years' time. The recovery was low because the things were completely opposite from what we saw in the 1990s. The Nokia shock disappeared, faded away gradually, and improved our cost competitiveness over time. Most recently by the competitiveness back in 2016. Now, how does our current crisis compare with these two sort of benchmarks? I think it's fair to say that we are closer to the Great Recession 2008 situation. The crisis was global symmetric, domestic financial system is solid, monetary and fiscal policies are very expansionary. Sort of the macro side supports growth much better than it did in the 1990s. When we now compare ourselves then with the current situation with the Great Recession, there are mitigating factors too. We don't have any asymmetric shock as there was that time in the form of the collapse of Nokia's cell phone production. And also cost competitiveness has remained quite okay, all right, so far. There are some worries that it will weaken. There are some projections, for example, by the Bank of Finland that we'll see significant decline in cost competitiveness over the coming year. but it hasn't materialized yet, so it's still an open question. More problematic, I think, when we think about this current situation is that the domestic services sector has been hit right from the beginning. And now, depending on how the pandemic or the epidemic evolves in Finland, and what sort of restrictions we have to put on, for example, tourism, the impact could be much worse than what we have seen so far, but nobody really knows. The second issue that is of some relevance is that the labor supply and mismatch problems are bigger now, even though we have lost a lot of employment. Nevertheless, we see difficulties in filling some vacancies across the country in different locations. And obviously, public debt is much higher to begin with now, which means that the room for fiscal maneuver going forward is more limited than it was in 2008 and 9, when we had a very expansionary fiscal policy as well. And then there's a big question about the global economic environment. It is affected, first of all, by what is going to happen with the pandemic, and that we don't really know. But I guess currently the main sort of consensus view is that we are going to solve it only or tame it only through vaccine, and that takes perhaps half a year or something like that. But there may be longer-term implications of the crisis as well, which build on the earlier developments in international politics and economic policy making. One is protectionism. It has been on the increase for a number of years, and it actually may be that the pandemic adds to these tendencies. There have been geopolitical tensions, and nobody knows what is going to happen for those. So in this regard, many of the sort of short to medium term external factors are very uncertain, and we just don't know how the economic environment in that regard will develop. Before finishing, let me then try to say something about the sort of longer term consequences of the pandemic, economic consequences. One thing to observe is that, like in all deep recessions, there is a sort of path dependency. There is a sort of long tail of the crisis in terms of employment, unemployment, public finances. Even though the growth numbers improve in the short run, they may be even high for a while. It seems to be the case that employment and unemployment problems remain quite stubborn in the aftermath of any deep crisis, and particularly if you have financial crisis elements in this, and some of those are now developing, even though this wasn't originally a financial crisis. Same goes for public finances. It is quite clear that the economy is going to see structural changes, which are, if not only due to the COVID thing, at least partially the COVID is contributing to them. The forced digitalization of many economic activities has been one of the consequences. Sales through digital channels have become much more prevalent. The workplaces have been reorganized to allow distant work, and people have been using the distant work. Companies have used the distant work, and that means reorganization of economic activity within the companies. At the same time, we certainly will see changes in the supply chains, which have been very vulnerable if they have been organized on the principle of the highest efficiency or productivity, and they have been vulnerable to drops of some links within that supply chain. Now, I think the companies, given the experience we have had, are going to put more emphasis on resilience, in the face of various shocks. That will reduce probably the efficiency of the supply chains. Consumer behavior is likely to change for at least a number of years. That relates obviously to all kinds of traveling activities and perhaps social other activities which require social interaction, and that will have an impact on the demand, the structure of demand in the economies. And also there will be an impact on public policy, although we don't know exactly what. Monetary policy is likely to remain very expansionary for a long period of time, for many years rather than just a year or so. Fiscal policies are currently very expansionary, but I think the constraints of public debt will put a brake on those policy options going forward. The role of the state has become more important, given that we have seen in many places that the state is the only capable actor to combat a thing like a worldwide pandemic. As I mentioned, protectionism may be spreading more. In Europe, we have started to talk about strategic autonomy. It is not just because of COVID, but COVID perhaps contributes to that further. And then, as we have discussed this through this summer, the policy measures taken to combat the economic consequences of the crisis in Europe probably will lead to higher or deeper integration of economic integration of Europe going forward. Now, what should we think about Finland in this sort of global context? The first thing to sort of think about things is that this comes at an unfortunate point in time, in the sense that we have just recovered from a long recession. We have this lost decade behind us, and we were just about to get back to a growth pattern where our GDP would per capita would become higher than what it was 2008. And also our employment rate was on rise. Now this all has stopped, and it's very unfortunate. It has an impact also on it worsens, as I discussed, the sustainability gap in public finances, and that's going to have an impact on public policy for many years to come. On the other hand, even though we have this sort of rather dismal starting point for Finland, also I think the crisis has shown the power of good governance. Finland has had, despite of all sort of difficulties that we have seen in the basic healthcare at the local level, a functioning healthcare system compared to many other countries. The safety nets are strong. The policy responses have been rapid. There's a lot of trust in authorities. People tend to believe what they are told they should be doing, not 100%, but much more than in many other countries. So this is a country which has a good governance, a lot of trust, capable authorities, and it is a sort of good thing in global competition. And then there are some trends which actually may benefit Finland compared to some other countries. The forced digital transition that we have seen has already benefited many Finnish companies, and what we are going to have in the future is going to benefit our companies in that field even more. Also, given particular that in Europe the recovery package funded by joint debt now emphasizes a lot green transition, green investments. And Finland has a lot of companies and technologies which are useful in that regard. Should benefit the Finnish production in a number of areas, be it renewable energy, energy saving, recycling, whatever. And then maybe there is a thing which it's very difficult to tell. I don't say that urbanization is going to stop. It's a sort of major trend, and it's not going to be stopped by COVID. But nevertheless, it may be that the great agglomerations, which have great benefits in economic efficiency, may be a little bit less attractive now than they have been in the past few years. So perhaps the relatively peripheral location of Finland, its small size, they are not that big handicaps going forward as they have perhaps been seen in the past. And one of the interesting things, obviously, is that has been discussed now over the past few weeks, maybe a month, is that many competent people around the globe see a country like Finland an attractive location. And that is a thing that we should try to utilize as much as possible. So what are we going to see? To be quite honest with you, I don't know. I think if you look at our GDP sort of projection or pattern over the coming decade, I think it can be anything between a sort of repetition of a lost decade and a sort of rather benign, relatively rapid recovery, which doesn't take us quite to the trend where we were before the crisis, but which nevertheless means that our GDP is going to grow continuously. Of course, there are some cyclical variations, but continuously over the coming decade.